Hello, my name is India and I serve the Great Lakes Zone of the Christian Church Foundation. And today I'll be sharing information about tax-deferred retirement plans and how you can best leverage these assets to achieve your financial and charitable goals. Many employers offer tax-deferred retirement accounts to their employees to encourage them to save for retirement. Examples of these plans are 401k, 403b, 401a, and 457 plans. Individuals may also contribute to their own traditional IRA account or roll employer-sponsored plans to a traditional IRA when they leave that employer. These tax-deferred plans allow you to save for the future and defer paying taxes on both the earnings used to fund the account and the income earned on the plan's assets. Many employers also offer matching contributions to encourage these retirement savings. You'll pay taxes when you take distributions from these accounts, but for many, taxable income will be lower in retirement when funds are distributed to pay for living expenses. You can take penalty-free withdrawals from your tax-deferred savings as early as age 59 and a half, but you're not required to begin withdrawals until you reach the required minimum distribution or RMD age, which is now 72 for most people. So congratulations, you've done a wonderful job at accumulating tax-deferred savings over time, but now let's talk about tax-smart ways to use those resources. The additional income generated by taxable withdrawals can move you into a higher tax bracket, reduce your eligibility for certain tax credits and deductions, and you may even have to pay a Medicare surcharge if your taxable income is too high. For charitable individuals who are over the age of 70 and a half and who hold assets in a traditional IRA, a wonderful strategy is to make any charitable gifts directly from your traditional IRA. Distributions directly to charity from traditional IRA accounts are called qualified charitable distributions, or QCDs, and those distributions are tax-free. Many individuals will find the benefits of making QCDs so compelling that they will consider rolling all or a portion of other tax-deferred plans into their traditional IRA account. Other tax-deferred retirement plans cannot be used to make QCDs. When thinking about estate planning, many individuals will find that tax-deferred retirement plans will make up a large portion of their final assets. These assets can be left to others through a simple beneficiary designation. When withdrawn, they will be taxable to the beneficiary. Since the stretch IRA has been eliminated, most children who inherit tax-deferred accounts will now be required to fully withdraw those assets and pay taxes on them within 10 years after receiving them. This can bump your children into a higher tax bracket and add a significant amount to their tax liability. If given a choice, most individuals would prefer inheriting assets that do not carry this additional tax burden. However, retirement assets do make wonderful gifts for charitable organizations because charities do not have to pay taxes on those assets. An easy way to leave a gift to charity is by adding the organization as a beneficiary of a retirement plan. Just remember that some employer plans will not allow you to name a person other than your spouse as the beneficiary without your spouse's consent. Those requirements do not normally apply for a traditional IRA. For most people, funding your charitable legacy with tax-deferred assets is the very best way to maximize the size of your estate. Tax-deferred retirement accounts can also be used to create a testamentary charitable remainder trust, which will pay income to your heirs and leave a gift to charity. And if you have a foundation permanent fund, you could add to your fund by making it the beneficiary of your tax-deferred account. In an upcoming video, I will go in further detail about inheritance planning and charitable giving with tax-deferred assets. Until then, you can call me at 1-800-668-8016 for further information. I look forward to talking with you soon. God bless.